Hi, my name is Berlin, and I've been running a series of different investment strategies that you can adopt to assist you attain financial freedom or to help you grow your wealth, right? And we have already discussed about the three bucket rule. We have discussed about the dollar averaging cost, passive investments. And so in this video, we are going to be covering a strategy called portfolio diversification strategy or the diversification strategy. Now there are two types of diversification, and we are going to be exhausting both of these two types of diversification. But before we get to that, I'd like to remind you to please press the subscribe button if you haven't. For those who have already subscribed, thank you so much for supporting my channel. You are actually the reason why I keep posting videos. And as I post these videos, I would like to encourage you guys to engage me in the comment section. Ask me whatever questions you want to ask. If you want me to shoot certain videos for you, or if there are specific topics that you'd like me to cover or give priority, please do let me know and I shall give them priority. Now, with portfolio diversification or with the diversification strategy, this is where you invest in different assets, or within the same asset class, or within the same investment vehicle rather, you can still invest in different assets. Now, diversification will be something like you hold a portfolio of treasury bonds, you hold a portfolio of corporate bonds, and even with these corporate treasury bonds, you can still diversify within that investment vehicle of treasury bonds. How? You could be holding long-term bonds and short-term bonds. You can also diversify by going cross-border. You can buy treasury bonds in Kenya, you can buy treasury bonds in US, you can buy treasury bonds in UG. Have you guys heard of diaspora remittances? Diversification, right? So we have the diasporans, or the people in the diaspora, remitting funds to Kenya to invest in the Kenyan market. That does not mean that they don't invest where they are residents, right? So that is diversification. Diversification where you have different asset classes, and within this asset class, we have seen you can still diversify within this asset class. Another asset class that you could be having or that you can diversify in is stocks or shares. Now, even within these shares, you can diversification is wide. It's wide. You can decide to NSE have the banking sector, hold shares for the banking sector, hold shares for the energy sector, hold shares for the agriculture sector, insurance sector. And the reason why you'll be doing that, like now we've seen there's a rumor that the banking sector is about to collapse. In as much as I know that is not true, and I've actually done a video clarifying that the banking sector is still quite solid and it's not about to collapse, but in the unlikely event that rumor is propelled and it now leads to an actual bank run, because right now the industry is stable, but that rumor, the risk of that rumor is likely to lead to a bank run. And so what will happen if that rumor is propelled and there is a bank run? The banks are likely to struggle. And what happens when the banks struggle? Their share prices are going to drop. So if you are investing in the stock markets, and you only held shares for the banks, like I personally have a good appetite for the bank shares, yeah, but I have diversified into other sectors as well. So if you have an appetite for the banking sector like I do, and you only held shares for ABSA, for KCB, for DTB, for INM, for NCBA, Standard Chartered, you only hold shares for the banks, and these banks struggle, and the shares are down. What will happen to your investment? Of course, you are likely to lose a portion of that investment because their share prices are going to come down. And what will happen? What if you had 1 million to invest and you put only 200,000 in the bank stocks, you had 200,000 in the insurance industry, you had 200,000 in the agricultural industry, like now the listed one, you have 200,000 in the manufacturing industry. And the banking sector is struggling, and the shares for the banking sector has come down. Your investment, because of that diversification, your investment is not going to be as affected as much as if you only had shares in one sector, right? Now, we have mentioned bonds, we have mentioned shares. Now, you can also diversify into property, investment in property, right? An investment in property, like we had said, we have seen before, is you can invest in REITs, you can be an active investor in property. I could do a video for investment in property at a later date, but you can diversify into holding properties. And we know the advantages of holding properties, plus the disadvantages, which I'll cover when I'll be doing the real estate investment strategies, right? So this is what actually diversification strategy means. You diversify your investments into different asset classes. You diversify your investment across different borders. You are a Kenyan resident, you hold stocks in Kenya, you have Ugandan stocks, you hold shares in US, that is now the index funds and ETFs and what have you. So that is ideally what diversification strategy means. Now, the risk of holding your investments in one investment vehicle, or the risk of not diversifying, is that when that asset class faces market volatility. Market volatility is when the prices come down, the prices go up, when the prices of an asset is affected by forces of the market. So when your investment faces market volatility, you are likely to suffer huge losses if you do not diversify. Remember, like I told you earlier, even as I run this series on the investment strategies, on the different investment strategies, at the back of your mind, you need to know that some of these strategies, you can use them concurrently. For instance, as you're using the treasury bonds, as you're using the passive income strategy, passive investment strategy, you can invest passively in bonds, you can invest passively in shares. That in itself is, you have employed the diversification and passive investment strategy. All right? Do you have any question? Do let me know in the comment section. Have you diversified your investments? Or are you only holding your investments in land? Are you only investing in bonds? What do you think about the diversification strategy? Do leave me a comment in the comment section, and let's meet on the next video.